Happy Friday, traders. Look, there is a lot happening at the end of this week at the moment. And let's start off first with something important that happened overnight, which was some US economic data. Now, look, we had US services PMIs for September released last night. Market was looking for a print of 51.7. Any number over 50 is positive, it's expansionary. The actual number came in well above expectations at 54.9. That is the strongest number for US services PMI since February 2023. And so it shows, look, a lot of still resilience in the US economy, and it certainly does not need any more 50 basis point rate cuts, and it sort of supports what Powell was saying, that his base case was only for some more 25 basis point cuts for the last two meetings for the Fed for the end of the year. Now, US bond yields had a very good spike up on that data. So we saw US 2 yields spike up almost 10 basis points. And so they're now trading around about 3.7%, 3.70%, which is a good 20 basis points higher from the recent lows that we've seen, which is around 3.5%. So on the back of that, we saw a decent bid in the US dollar. So the US dollar's been doing exceptionally well this week. The dollar index actually closed up almost 0.5%, but the dollar index has actually rallied from 100 even lows from the huge big pivot support that market's been looking at for for it to break and then maybe see some aggressive US dollar selling. But the complete opposite's happening, and now we're seeing dollar index back up at 102 at the moment. So yes, it's at the moment it has not been profitable selling US dollars on the back of this stronger data that we've seen. Okay, now the next big thing that we're seeing is geopolitical risks in the market. We've seen a lot of headlines last night about what's happening with Israel and Iran. So Israel media and also Sky News yesterday were reporting that they expect a retaliation by Israel in the next couple of days. So something imminent. Now the sort of things that Israel is looking to target is potentially Iran's nuclear facilities and also Iran's oil facilities. President Biden was actually asked yesterday about whether or not Israel would be targeting their oil facilities, and he actually said it is something that we are discussing. So on the back of that, we saw a very aggressive spike up in crude last night. So crude was up over 5% last night and trading now well above $70, up towards $74. And also gold, which sold off yesterday on the stronger US data and went down to around the 26.30 area. Spiked back up to close and open today's trading up around 26.55 area. So look, and equity markets at the moment have been very complacent on all of this, and we only saw them marginally lower. But it's obviously with weekend coming up, and obviously there is a big potential for gap risk if Israel does actually target Iran this weekend. So things like crude, gold, could be sharply higher on Monday open. So certainly traders, you don't want to be going into the weekend either short crude or gold, and then also equities as well. You don't want to be going fresh long equities into the weekend. For the simple fact is that yes, equities could be sharply lower on gap risk, just depending on how bad the escalation is on the weekend. Okay, so lastly, also we do have the non-farm payrolls this weekend. Tonight in the US. Market is expecting 140,000 for the headline print, and also looking for the unemployment rate to remain steady at 4.2%. We did get a good ADP report, the private payrolls number on Wednesday. That came out above expectations, expecting 120 there, came out 140. So look, the market is expecting the payrolls to come out and probably print somewhere close to expectations. I would imagine though, the payrolls print would need to come well above expectations or below expectations to really move the market with the geopolitical risk hanging above it going into the weekend. So I think that there probably will be some sort of initial reaction. If the payrolls come out on expectations, I don't think there's going to be a too big a move. And as I say, it needs to really come out above or below expectations to really move the market. But then after we sort of get whatever reaction we do get to the payrolls, the market is going to be firmly focused on the weekend close, and I think the payrolls number will be forgotten very quickly as traders start positioning themselves for potentially what happens on weekend, and they certainly will not want to be part of the gap risk that could happen on Monday. So certainly be aware of that on the close. And wish you the best for trading in the last day of the week, and we'll check back in on Monday.